Bim. What's up folks, Nicholas Saunders here, video number 20. I'm going to be talking about the different structure options for personal risk insurance like life insurance, TPD and trauma insurance in this video. Why should you listen to me? I've been working in the life insurance and personal finance space for over 7 years, so just want to share some of that knowledge to help people make better decisions about their own finances. This topic is of critical importance because the structure of your policy will determine what cover you have left over after you make a claim on TPD or trauma insurance. And that's important because if you have made a TPD or trauma insurance claim, it means that you've had a significantly negative impact to your medical history. And your medical history is what would be assessed whenever you make an application for a new policy. So a lot of the times, what you're left with after a claim on one of these policies might be what you're stuck with. Okay, so just a quick explanation of what kind of insurance we're talking about here. So personal risk insurance includes lump sum payout policies like life insurance, TPD, trauma insurance. Life insurance pays out a lump sum if you pass away or if you're diagnosed with a terminal illness, typically. Total and permanent disability insurance, or TPD for short, this pays out a lump sum payment if you're sick or injured and you're unlikely to ever work again. And then you've got trauma insurance, which pays out a lump sum payment if you are diagnosed with a serious illness, heart attacks, strokes, cancers, things of this nature. All right, so the other thing also I want to quickly explain is the difference between direct insurance and retail insurance, because I'll probably refer this during the video. Direct insurance is insurance that you take out directly with an insurer. So it might be through their website, it might be with one of their customer service agents over the phone, but it's directly with the insurer. These are usually pre-packaged, so they're a bit more limited in the different parameters that you can choose. Retail insurance is distributed through advisors like life insurance advisors and financial advisors, and this is a more tailorable policy. You've got the choice of different structures, different parameters. So yeah, there are differences between direct and retail cover. Okay. So the first structure I want to talk about is standalone structure. Now, this is what I believe people intuitively think they are getting when they're first introduced to the idea of taking out life insurance, TPD insurance, and trauma insurance. I think people assume that it's a standalone structure. So I've got that depicted here. You can see in all of these examples that I show you today, it's going to be $1 million life insurance, $800,000 TPD insurance, $200,000 of trauma insurance. So that's not an unlikely level of cover. Now, yeah, all three of these are independent standalone policies. What this means is, if for example you claim on TPD gets wiped out, you get left with your $1 million of life insurance, your $200,000 of trauma insurance, just as you would expect. No surprises. Here we've got an example of claiming on trauma insurance. Same thing, just the trauma insurance gets wiped out. You're left with your $1 million of life insurance, your $800,000 of TPD insurance. So that's standalone structure. Now, the thing about standalone structure is it's not actually that common in the market. Direct insurers rarely offer this. I'm actually not aware of any that do. So it's definitely not the typical structure in the market, even with retail, okay? Although it is an option with retail insurance. Now, we've got linked cover here. Now, this is the typical way that insurance is structured, okay, with direct insurers and even a lot of the times with retail insurers. Quite a few advisors out there you probably find aren't aware of the nuances in different linking structures, but I'm going to break it down here quickly for you. So this is the typical link structure. You can see here we've got the same levels of cover: $1 million life, $800,000 TPD, $200,000 trauma. But these little dotted lines here mean that the policies are linked. Now, what happens if we go back to our example of claiming on TPD? You claim on TPD with a link structure, everything below the red line here gets wiped out, okay? Because it's all connected through this linking structure. What you're left with, because it was $1 million life, $800,000 TPD, you're left at the end, after that claim on TPD, with $200,000 of life insurance. That's it. Okay? So that's the typical link structure. Let's have a quick look at an example of claiming on trauma here. Okay, the trauma is $200,000. Everything below the red line gets wiped out if you make a claim. You're left with $800,000 of life insurance, $600,000 of TPD insurance after a claim on trauma. Okay, so that's the typical linking structure. Now, there is another linking structure that some retail insurers offer where the trauma insurance and the TPD insurance are linked separately to the life insurance. So I've tried to illustrate this here. So you can see here that the trauma insurance here is separately linked to the life insurance. That's depicted by this line here. Now, we go back to our examples of claiming. If you claim on TPD, everything below the red line, bang, disappears. What you're left with in this situation is $200,000 of life insurance and still $200,000 of trauma insurance. Okay, so you can see how that's different from the previous link structure option. The previous link structure, the trauma insurance was wiped out by the TPD, and that's typically what will happen. Okay, we have a look at another example. So I'm just calling this linked structure. Well, that shouldn't be typical there. I was meant to get rid of that, but anyway, this is like linked direct to the life insurance. That's what I'm calling this. So here we go with a TPD. Oh, sorry. No, this is a trauma claim example. So trauma claim, everything above the red line here gets wiped out. Trauma gets claimed on, it gets drawn down and removed. $200,000 of life insurance gets removed. You end up with $800,000 of life insurance and $800,000 of TPD insurance. In the previous example, it was $800,000 of life insurance and $600,000 of TPD in the previous linked structure, the typical linked structure. So you can see how this structure where the TPD and trauma are directly linked to the life and cover, to the life cover, is preferable. Okay. Now, you're probably thinking, well, why wouldn't anyone not opt for the standalone structure? And as you probably also guessed, standalone structure is more expensive. Okay. Now, the typical link structure is usually a little cheaper than that direct to life insurance linking structure. I've got a quick example here to show you with MLC. So I just took these quotes just before making this video. So it's for a male, age 35, non-smoker, office worker. With the standalone structure for this person, and again, this is for the $1 million life cover, $800,000 TPD, $200,000 trauma cover. You're looking at $108 for the standalone cover. Okay. The typical link structure, $78. The direct to life insurance link structure, also $78. It's not always the same price, but in this case, it turns out that it is. So that would be the obvious choice. And then you've got something and I haven't actually touched on this. I was meant to mention, you can combine the different structures. So a very common way of utilizing link structure and standalone structure is for someone to have their TPD and life insurance linked, meaning if you claim on TPD, it will draw down on the life insurance, but having the trauma insurance standalone. So that claim on TPD wouldn't impact the trauma insurance at all. Okay, and vice versa, if you claimed on your trauma insurance because it's standalone, it wouldn't impact your life insurance and TPD. Okay, and I've quoted that here as well with MLC. So linked life and TPD, standalone trauma, $88. This is monthly premiums, by the way, guys. So all the retail insurers will offer combinations of linked and standalone. That direct to life insurance linked structure, as I've been referring to it, that's only offered by a minority of insurers. MLC, PPS Mutual, Clearview, they offer that. And like I mentioned earlier, direct insurers will generally not offer the standalone structure. It's generally just the typical linked structure. So Real Insurance, Kogan. I was going to say Noble Oak, but I think they have a standalone trauma option. Nonetheless, I think that's pretty much everything that I wanted to cover off. But yeah, that should give you some pretty good insight into what happens if you do make a claim, the pros and cons of the different structures, and the amount extra that you have to pay for those different structures. Obviously, standalone being the most favorable, but also being the most expensive. And I think a mix between standalone and linked, like that example that I mentioned last, seems quite logical, simply because if you claim on, look, the way people come up with a life insurance cover amount and a TPD cover amount, it's often based on future earnings and paying off debt in both situations. So the cover amounts are usually pretty similar. But if you claim on TPD and you have income protection, those you can sort of combine the two and it makes sense. So that's actually why some people will have a bit less TPD than life insurance in some circumstances. But trauma insurance, it's usually for medical expenses, maybe a bit of short-term loss of income. It's not, the idea isn't to wipe out debt or cover future expenses for the rest of your working life. It's a different purpose. I think the logic behind having standalone trauma makes sense there. So yeah, look, that's pretty much it, guys. Thanks for watching.